journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the gold market here because, as you can see, we're up at that 1.618 ABCD pattern that measured to 36.49. The 1.618 was 36.45. We're trading at 36.49 right now. The high has been 36.55. Now, this is a 4-hour chart. Now, what we're going to do now is we're going to switch over to the daily because I want to be able to show you how many, you see these different longer term patterns here over the past 7 or 8 months. We had one at 36.18. Okay, one at roughly 3,600, and the last one at 36.49. Now, whether this is the last one, I don't know. All I know is there's a whole bunch of them up in here. If we look at this on the long-term weekly, you might be able to see how many weeks we've been up, 20 weeks in a row. But all of these numbers that we're watching here are coming due right about now. If we'll do this one together, because this is the weekly right here. This is the last big weekly move we had. Remember that we had the market broke really bad here. We went from 3,500 down to $400 an ounce, folks, in 1, 2, 3, 4 weeks. Okay, now that's an important bottom. So if we take that ABCD pattern right there and move it right up to where we are, it measures up here to 36.58. So far, the high today, folks, has been 36.55.50. Now, whether that's the high or not, I don't know, but you have another ABCD coming in right behind it right there. We're going to draw that one in, and you'll see why we have so many patterns. I wouldn't be buying gold here. I might be wrong, but mightn't be selling it either. But there's where we are so far. That measures a 36.58. So far, the high has been 36.55.50. We're at 36.47. That's why I think you'd be really cautious about buying gold up into this area. But that's just patterns, folks. There's other things like fundamentals that are beyond my pay grade, and that's what we're watching to see whether these things unfold the way we want them to do, okay? All right, there's one other thing. I want to switch over for just a second here to the cattle market because we have a little change in the direction of the cattle market. Remember, we had some nice moves here. The ABCD, the high today was the 382, and as you can see, we're starting to move down in the cattle market now. We're down about 7 cents from the high. There was your first move, ABCD. We got another one coming in right here. So what we're waiting for is a really nice, this is over the last 4 or 5 days, a really strong 382 coming in here in the next couple of days. If we're patient, we should be able to get it off of any low that we have back in here today, like it would come in here at 37.50. That'd be up 2 points from where we are right now. But that is not happening, so we'll move on to the next one, and we'll take care of that. Okay, now our guest today will be Mike Moore of More Analytics, and Mike has been telling us about the price of oil getting below $62, and by golly, today it did it. As we come up here and look at this one, I thought we had a chance to hold that level, but we did not. Let's get the hourly up here, and you'll see here, there's where I thought we were going to be able to hold this level, but we didn't. We did not, in fact, do that. You can see here on the move down, let's just get this out of the way. There's the ABCD comes in. Let's just draw this in if I can. Hold on 1 second here. There's your AB. Yeah, the beautiful 382 retracement there yesterday. And there's your profit, or there's your bottoming air should be right in about where we are right now. So whether that's good or not, I don't know. All I'm watching is the fact that this is ABCD, that's a 382, that's a 382, and that's really what I try to do. Folks, I made a big prediction in the stock market, and as all of you know that get the newsletter and stuff, and I really believe that I thought that we had it nailed on the 2nd. because the market came down 120 handles that day on Tuesday, and then of course Wednesday, Thursday, and then today took it all back plus some, but it did not violate it. And on the four markets that we watched, the Dow Jones did not violate it. The S&P did violate it, and the Russell did not violate it, and the NASDAQ did not violate it. So there was only the one, which is the S&P, which happens to be the big one, but that is the way I look at it. So to me, there's still a possibility that we could be headed down. Today is the day is really important as today's close, because we come back to the 382 several times. If we can close strong, there's nothing negative about this. Let me prove to you that in just a matter of a few seconds here. We'll get the Dow, the S&P one here first. We'll put the hourly up on the S&P, and you'll see what I mean. You can see where there's your bottom right here. You can see you come right down to that bottom. Where was that? Take a look at this, folks. From your high down to your low, stops exactly at the exact 786. Okay, and exactly 50% off that. That's why that bottom is in now. Now, if it can turn around, and you can see here the NASDAQ is trying to get back above it again to get above that. So if we can get above those 382s and close strong up in here, there's nothing negative about this market at all. Fact is, the NASDAQ, or the Russell is still up on the day. These others, of course, are not, but that's what we're watching. But we're right at these levels, and they mean something. And we've seen them before, because when you watch these ABCDs patterns and these ratios, when they go through them, they're moving to another direction, and that's why you have to be really careful. Today's close is the real key. I know we're down 100 handles from the S&P. We went from 40 90 handles, 95 handles, and now we've rallied back to the 382. That's what we've done so far. We'll just draw it in so you can see it. Let's do it with a 13 minutes so you can see it quickly, because we're right there again. There it is right there. Hit it 1, 2. We're probably going to hit it again here in just a second, and that's what it's doing here. It's backing and filling. If it can get above here, it's going to look pretty strong. But if it doesn't and closes down below that, then this could be a key reversal day, and then you'd be looking at it. The Bradley stuff that I look at is pointing down now until January, but that doesn't mean it might not work this time. It was due to come in on Tuesday. It was big down on Tuesday, but 2 more days and went back up again. But we're over a whole cluster of stuff in early September that we've talked about before that are very similar to what happened in 1987. And I'm not predicting a CRASH, but if the market closes really badly today, there's always that possibility, because there's a lot of people been buying with no fear, and they shouldn't have any fear, because the market's been keeping them alive, and they might keep them alive a lot longer. So you've got to be able to, manage your risk, and that's really what you're trying to do. Okay, so these are my two cents for today. I will not try to bring up too much, but anyway, these are the levels that I'm watching each day to see whether they're going to hold up and keep it working in that direction. That's what we're trying to do here. Okay, so there's the pattern in the crude oils. You can see they completed it just exactly in the ABCD pattern right in here. Now we're going to find out whether it has any good. We've only been rallying 30-40 pips, which is nothing. All right, we're going to take a little break here. We're going to cover a couple stocks and a few other commodities, and we'll be right back. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, I'm going to talk about Goldman Sachs here just because of the volatility we're having today. You can see we made a new high. It has that big three drive pattern up here, and we dropped 35 points. You can see there's where we dropped to, and didn't even take out yesterday's low, so there's nothing bearish about this at all. The only thing that we have going right now is, as you're watching Goldman Sachs trade, it's rallying back to a 382 retracement, much like we're doing in the futures themselves. So there it is right there. It just did it in right there. So whether that means much, I don't know. All I'm telling you, from my perspective, is it's the close today that's going to be very, very important. We've had lots of volatility. We've seen this before, but the close today is going to be the most important because of the fact that we've had that big break. When you lose 95 handles in something in about 2.5 hours like we did in the S&P, that takes a lot of selling, folks. Now, the rally back is so far stopped at the 382 at 64.83, but we could go up to 64.90. We could go up and make a new high. That's why this day is so very important with the close. All I'm trying to bring to your attention is that if it does close poorly today, then this is a key reversal type day, and that means we are going to be headed down, and it is going to be a very, very violent down, in my opinion. But again, opinions are like armpits. Everybody has one, and it usually doesn't smell very well. So let's keep in mind that that's what we're watching with this. I bring this to your attention because this is what the Dow Jones is basically doing. Just looking at Goldman Sachs. There's other stocks in the Dow, of course, but this is the big one. This is the one, the most expensive. It gives you the best idea of what we're watching here as we watch these things here unfold, okay? So that's a couple things. We've already went through the S&Ps and all these other things. These are things that we've already talked about, and we've already talked about the gold. Now, the NASDAQ just hit the 382 again just now. I just saw it went right up to it again. We just hit it again right there on the 382. We just hit it again in the S&P also. We just went right up to 85 and saw that again. So it's still trying. It's got to pop through there and get up around 6,500 to take half of this back, and then it'll look pretty good. The Dow, you see, is still doing the same thing. It is just going right up against that 382, just like we are with some of the others, okay? And that's pretty much it. Okay, we had a question about a stock, JP Morgan. Let me get this up here for a second, and we'll talk about it. And hold on one second. JP Morgan is right here. I probably made a new high today, I would guess. Yes, we did. There's JP Morgan, did make a new high today. Let's move this up here, and we'll see what we got going here. Well, you can see with there's another expensive one in the Dow. That's why the Dow got hit so much. Wow, that is an absolute lovely 3-drive pattern. Look at this one, folks. There's drive 1, there's drive 2, there's drive 3. Look at this, 1.3, 1.27, 305. It's dropped $20 in the first hour. That took a lot of selling. So whether that means much or not, I don't know, but that's what we're looking. This is also, when we watch this on the long-term weekly, you're seeing a big expansion up to this level right there. Also, we've already pointed that out several times. So that is a 3-drive to a top pattern in the Goldman's JP Morgan so far today. Now let's just look and see if it's coming back on the, well, it hasn't even begun to have a 382 retracement. Look at this. This dropped from, dropped in 305 all the way down. Dropped, woo, that's a big drop, $40. And we haven't even been able to make 10% retracement yet. So 298 would be the 382. So we're watching that one also with the background of it's how it closes today, folks. My opinion, because I watch these markets a lot, I'm pretty familiar with how they operate. If they close strong, they're going to look very good. And if it closes bad, it's not going to look that good. But people that trade this stuff, they're not going to see it for a day or two that it's a fact that it's a big reversal day. Unless it's something like where the S&P closes down, 100 points or something like that, then that would be something really big. I don't expect that to happen, but there's always that possibility because of the levels where we are. We've been going in this bull market for 15 years. The things that I'm seeing are the same things that gave us the bottom on the 5th of November of 2009. They're the exact same things. The Bradley model, the 3-drive pattern, all that stuff is lining up the same way. Will it work this time? I don't know, but I've never seen so many ABCD patterns across the world and everything. The DAX, the German market, the Japanese market, the emerging markets, all of Hong Kong, all of them are just lined up pretty good. Let's take a look here since we're talking about Hong Kong. And we'll get up here and take a quick look at here because it's been in these really strong areas for a while. HK, where are we at? Here we go. Here's Hong Kong. Get the daily up. And as you can see here, where are we at? We've been here for several days now. Today's date is the 5th. Okay, Mike is going to be coming on in just a minute, so stay tuned for another 7 minutes. We'll have Mike up. We've been in this area right here. Now, if we look at this on the long-term weekly, you're going to see this monster 3-drive pattern. See that? There's one 3-drive right here. That caused a 30% correction. Now we got another one up here. How much is this going to cost? And you can see we had a high of just about 26,000. We're trading at 25,417. That's down from the high that we had, but still holding up relatively well. I think if we put the daily up, you might be able to see that just a tiny bit better. Yes, we had a little bit of a pullback here. And then today's action, there was yesterday's action, and then this was today's action. It actually rallied back a little bit. That was before we started to go down. So we're going to find out what it does. If we get above 26,000, then I'll have to say, well, maybe it's going to go a little bit higher. But right now, we've major topping area here in the Hong Kong market. And also, if we look at the Chinese market, the FXI, you're going to see something very similar, but on a much weaker because of the fact that here it is right here. Let's get this weekly up chart so you'll be able to see where we are on the weekly here, that it's been in a bear market for quite some time. And it's been here now. How many weeks have we been here at this level? There's where we are. And we've been here for 1, 2, 3, 4, 5, 6, 7 weeks, folks, right here. And that's all we've been able to do is make drive 1, drive 2, drive 3. That to me is not a very bullish chart. It's just basically waiting to roll over. Now, it hasn't rolled over yet, but we haven't made new highs yet either. So that's why it looks a little negative from that point of view, okay? So let's move this out of the way here. And I want to talk just a little bit about my favorite commodity. One of my favorites, of course, is wheat. I got stopped out of the wheat again. Let's get this daily up here. And you can see we did make a slightly lower low right down in here. So what I'm watching for now, we're trading at 21. We have one more pattern here in the wheat that we might be able to get here on the next day or two. And I want to be a buyer there at 12. It's right, the low so far, the low has been 14. I'm going to buy it here at 5.12. I'm doing that because I don't think people are going to stop eating pasta, bread, and cookies. It's just not going to happen. So anyway, that's what I'm watching here in the wheat to try to buy it at 5.12. That's 9 cents from where we are, well, 10 cents from where we are right now. So that's what I'm looking at in the wheat market. Remember the corn market that nobody liked back when it was about $3.90? We'll take a look at this one and we'll take a break. We got Mike Moore coming up in just a minute. Hang on there, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we got the energy man in the house, Mr. Mike Moore. What are we looking at, my friend?
How are you? Thanks for having me on, Larry.
I'm good. Living the dream.
You want to start off with crude oil, or what do you want to start off?
Let's start off with the oil complex. You betcha.
Okay. So the crude, I'm not going to go over the higher time frame stuff, but I warned we were likely in the last stage up from the move from 61.29 up into here, and now we're in a bearish trend against that. The trade back below 64.32, which was the trade below this line here, I warned would bring in pressure. We're seeing that down to 61.45, and we further broken below this formation down in here, which further projects it lower. I said, what did I say? It's more 90 cents minimum, $3.40 maximum from 62.88, and we've traded down to 61.45, more than attaining the minimum. If we were to trade back above through this line, that would warrant a decent strength again. That's going to come in at 62.92 plus 0.4 of a tick per hour starting at 6 o'clock p.m. Sunday night. And the RBOB, or unleaded gasoline, we are leaving a minor bearish reversal above on the day. Also had a key failure in here today as well. I said get short on decent penetration below 198.23. That was this line right here, and we've dumped down to 194.62. If we were to break back above this line decently, that would warrant decent strength again. That's going to come in at 198.49 plus 2.5 per hour starting at 6 o'clock p.m. Sunday. And the heating oil left a minor bearish reversal above yesterday and has been continuing to come off. Don't really have any definitive nearby formations to really say much about.
How's the gasoline been looking during this time of the year? Should be strong, shouldn't it?
In the RBOB?
Yeah.
Well, down on my analysis in this part right here, I have a seasonal trends page, which I don't really talk about much on here, but on the RBOB, it says it's seasonally between August 7th and October 10th. It should be bullish, which has worked 80% of the time for the past 15 years. That is currently on hold, though, because this, like I said, just failed through here.
Yep, it sure did, yeah.
But buying that on the, let me just double check that again. But on 8.7, which was from in here, you can see that we had rallied from basically 191 up to 204.66. That's why, even though I get this from more research and trading, that's not related to me. They're an excellent service that does a lot of seasonal trends. But what I do is I augment those by telling you when to get in and out to protect yourself during it. Because if you just buy on 8.7 and sell on 10.10, you might have to withstand a very sizable move against it, or there it would have gotten you out of that.
Sure.
So going to Brent, we left a minor bearish reversal above 2 days ago. That also, sorry, let me get back up in here. The trade below 67.79, right up in here, warned of pressure, and then the further trade below this formation right here at 66.85, also warned of pressure, and we've seen pressure down to 65.07. I would also note that this is a more substantial move. This is not just a correction against these moves up down here, because we've taken out all the final exhaustion. So suggests that this has more longevity and power to the downside. If we were to trade back above this line decently, which is going to come in at 67.06 plus 0.7 of a tick per hour starting at 6 o'clock p.m. Sunday. That would warrant a decent strength again.
Okay.
And the gas oil left a minor bearish reversal above 2 days ago. And if we fail below this formation right here, we're right on the cusp of failing it. That's going to warrant continued pressure. That line's going to come in at 678.48 minus 5 per hour starting at 6 o'clock p.m. Sunday. Like I said, I have this line there, so I don't have to redo them all today, but you can just back that up a couple hours into today to see where that is. Do you want to go to your break now, and then I can go to the S&Ps afterwards?
I think we got a couple of minutes left. Please keep going, Mike.
All right, let me jump to natural gas here. Shooting back up towards the beginning of the analysis. The trade above 281.10. I said projected this upward 85 ticks minimum, 200 ticks plus maximum. We'd attain 320 ticks of that going into this AM. And now we've been holding under this key formation right here. If we were to break above that formation, which is going to come in at 309.40 minus 0.3 of a tick per hour starting at 6 o'clock p.m. Sunday, that will warrant a decent strength. We break above there decently and back down through it decently. I'd be out of longs and looking for pressure to come back in. Likewise, if we fail below this formation down below here, which is going to come in at 294.10 plus 1 per hour starting at 6 o'clock p.m., that will warrant a decent pressure.
Mm-hmm. Mike, when you talk about 1 per hour and stuff, what does that mean? How many bars it takes to get to that target, or how does that work?
Yeah, so if we're talking about natural gas right here, just to blow it up real quick for you to show you, if this trend line right here, right, delineated by T3, that comes in at 3095 or 309.50.7 at 1 o'clock. Mm-hmm. That means at 2 o'clock, you come back up here, it's at 309.50.4. That's why I say it's coming down at 0.3 of a tick per hour.
Okay.
Whereas this is a whole 1 tick per hour, that would be this line down below.
Okay. I understand that, yeah. This means if it's moving faster per hour, it means it's picking up speed. If it's moving slower, it's losing speed. Is that pretty much what it means?
Exactly, and that means like if you were to short below this by say 30 or 40 ticks or whatever the decent penetration happens to be on the day, you'd have to keep in mind that as this moves up a tick every hour, the place that you're shorting is moving up a tick every per hour, and likewise your stop back above it is going to be moving up a tick every hour.
Okay, now we got to pay a few bills, and we'll be right back with Mike Moore of More Analytics. Stay tuned, folks. Good stuff.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Mike Moore. Mike, please continue.
Okay, I was going to jump to the S&P, if that's good with you.
They're waiting for that one, that's for sure.
Okay, so if you've been following us on the show for a while, you know I've been bullish since holding 3502 on a macro level, and we've rallied 3030.25 to the upside, plus a little bit more this morning. A lot of other bullish calls in here. Most recently, we had broken down we held exhaustion up here initially, and then fell below this formation and this formation, and then broke back above it right here. Rallied to the upside. Held this main trend line I had right in here at 65.36.86, almost exactly at 65.41.75, and rolled back over. If we fail below this line decently, which is going to come in at 64.68.86, I'm going to give you the time right now for that. It's going to come in at 64.68.86 as of 1:30 p.m. Eastern Standard Time. A decent break below there will warn of decent pressure. Decent today is 28.25 points. If we then further take out this formation down here, which is going to come in at 63.92.18 plus 10 per hour, that will warn of decent pressure also for at least 130 points. If we were to break above this line right up here, that would warn of strength for 100 points plus. The better trade would probably be if we broke above it decently and back down through it decently. I would look for decent pressure.
Okay.
And in the gold, been trucking to the upside here, making all-time highs. If you've been following the show for a while, you know that I've been bullish since August 16th of 2018 from 1183, and we've seen 2,456.4 per ounce. From there, plus more this morning. A lot of other bullish calls in here. And then just more recently, excuse me.
Do you have any big upside targets on gold I have a question from one of our den listeners. What's your upside target on the gold?
Well, we do have a macro possible exhaustion at 37.48.80. But the reality is, going into higher time frame charts here, you're in all-time highs up in here. So there isn't any structural resistance up there, but you do have possible exhaustion area between 37.48.80 to 38.45.90.
Okay.
And then finally, the Bitcoin. We've been bullish overall from 16,275. We've seen 108,925 per coin to the upside. A lot of other bull calls in here. And then the trade back below 122,850 brought in 15,060 of pressure. A couple other bearish calls in here. Those are on hold. And then on a shorter time frame basis, we broke above this formation right here. That came in at 110.010, which I said projected this upward 1,200 minimum, 3,300 plus maximum. We attained 36.95 of that before, maybe a little bit more here, I guess, this morning before rolling over. If we were to fail below this formation right here, which is going to come in at 110.456 plus 24 per hour starting at 6 o'clock p.m. Sunday, that would warn of renewed pressure.
Okay. Mike, I have a question for one of our listeners. Is there which of the three components of the crude oil, RBOB, and heating oil, which is the one that's leading the market now?
Hang on one sec, I'll show you. So every morning, as part of the analysis down in here, on a day-to-day basis, you have these little things right here, plus, negative, and equal, which meant that coming into today, that the RBOB should have been the strongest and the heating oil the weakest of the three relative to one another. Let me just take a look at one thing. And that is not playing out necessarily the way expected, because the RBOB's down 528, crude's down 184, and the heating oil is down 470. Let me just take a look at the corrects here. That's not the right, hold on. So that is rolled over and changed, which is part of the nature of how these things work out. But for the previous 3 days, this whole ride up here, a lot of this was RBOB driven, not heat, with the heating oil behind it and the crude, the laggard. Give me a second here, 1,900. So that you probably would have made $2,500 more, $2,100 more per contract being long the RBOB than being long the crude on the way up.
Okay.
Also, the heating oil crack just turned bearish yesterday, so I expect that the heat will probably see some weakness relative to the crude in the days ahead.
Okay, that's really good. One other question that we had, and that is, do you chart silver at all, Mike?
I don't. I mean, I have it up here. I haven't looked at it in quite a while, but silver, I know it broke out of some key formations I had on the weekly charts here. I had just drawn this quite a while back, but you can see from this line, I literally haven't looked at this chart in months, but obviously the break above there.
I don't look at it either.
Really moved up hard. So yeah, that's running off in its own dynamic here, and this is probably going to be the all-time highs up here. So
that's pretty good, Mike. Listen, we're going to have you on again pretty soon, so please keep the good. Tell the folks how they can reach you to get a copy of your letter.
Yeah, let me pull it there. It's I had it here up here for a second. There we go. Can everybody see that okay?
Yeah, it's coming in good.
Yeah, feel free to give me a call or shoot me an email.
Thank you. Mike Moore, More Analytics, folks. Stay tuned. We'll be right back.
Thank you, Larry.
Thank you, Mike.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're going to take a look at the Treasury bonds. One of the reasons why we're having so much strength in the stocks, you can see we had a 382 pullback here yesterday. Of course, with the news coming out, and makes the ABCD up to the 1.618 expansion. We look at this on the long-term daily. I'm going to have to refresh it here, but you'll be able to see what we've been waiting for quite some time. Haven't traded. There you go. There was your ABCD on the downside right here that we talked about, and now we're going up to this level right about here. Now I'm going to move this over a little bit so we can see it a little bit longer time scale, because I think it's very important. At least it is to me. Anyway, there's our high that we had way back here in April. Okay, remember that's when we had that tremendous move, if you'll remember. And we had to rally up, and as you can see, where we're coming to is very close now. We're only a point away from this level right up here. That's a 61% retracement, and it's going to be an ABCD pattern also, and it'll also be a 3 drive. So watch that level of 117 in the bonds, because that's going to be a pretty tough. Now, with this type of action today, that tells you it's probably going to go a tiny bit higher than that because of the power out of this CD leg. So watch this level very, very closely. This didn't draw the right way, folks. Let me redraw it because sometimes it's a little too sensitive, and you'll see there's where we are. We want to get it right there. There's what we're watching at this level right about here. That was the old high from way back in April, all right? Now remember, this has been in a bear market for quite some time. Going back, if you take a look at the weekly here, this is when they gave us the old razzle-dazzle about the, what that was. Look how far that was. Can you believe what they tried to tell us, folks, about negative interest rates way back here? This is a joke. Look at that. This is what they tell us. Look where we are now. Be careful what you listen to, folks, including me. Me, most definitely. Well, anyway, that's what we're watching here today. So live every day in an attitude of gratitude, and may God bless.